the equity market dipped by 13 trillion naira in the month of June alone. But cumulatively this year, the market had done over 48 trillion naira. In addition to what it started with in 2026. We started it July as well with another round of sell-offs in the equities market. So it shows that investors are still taking their profits as we speak. And a couple of things that are actually responsible for that was one, the Dangote refinery private placements. People were selling their holdings in the markets to go and get the private placement. So that really caused a significant drawdown.
We are in July already.
Yeah, sure.
H1 performance. Can you give us a market review? H1 performance per sector.
In H1, the leader is actually the oil and gas, and also the industrial goods sector. All right, industrial goods sector closed around 98%. Almost the same thing with the oil and gas. Courtesy of the Dangote Cement, Wapco Cement, Boao Cement, and a couple of that as well. The cap of this were the Badger Paints as well. So they were the ones that moved that particular sector in the first half of the year. Very, very significant. The oil and gas also had Aradel and also Seplat. In the oil and gas, aside from all other stocks within that particular basket. So they did all well. Aside from the insurance that had a negative year to date, the banking stocks was around 47% or so.
We know that the oil prices have dipped for where it used to be.
Yes.
We know the Iran situation is the way it is currently. Do you say this has really driven most of this oil and gas stock to take a nosedive in their prices?
Actually, the impacts of the went for the increase in the oil and gas actually was felt more by the upstream sector. Those ones in the upstream, the likes of Aradel, Seplat, and though Hoando result is not how to have seen the impacts on that. However, when you look at the Aradel very well, you will see that what influenced their performance more, they had a very good performance, and what influenced it in the Q1 more was the ND Western acquisition that they did. So it was able to consolidate that, and their financial statement was very fantastic.
Welcome once again to your favorite podcast, Broad Street Updates with SCM Capital. And as usual, I have with me here our favorite research expert, Jide Downsy from SCM, Head of Research, SCM Capital.
Good morning, everybody.
Welcome very much. Again, you could follow us on all social media handle, scrolling on your screen. You can also follow us, give us a like, a follow, and subscribe to all channels on both platforms. Thank you. Okay, Ms. Jide, wonderful week. It was a big one. So tell us, what's your take? Can you give us a review of the market first? Let's first start with that. How did the market perform last week? How was it?
Yes. A couple of activities happened. Of course, yes, this week ended the first half of the year, all right? Yeah. And closing the first half of the year, and the markets, particularly the equities market, was 47% year to date. That was a massive sell-off in the month of June. The equity market dipped by 13 trillion naira in the month of June alone. But cumulatively this year, the market had done over 48 trillion naira. In addition to what it started with in 2026. So though the bearish sentiment happened as a result of a couple of activities on the floor of the exchange, but not necessarily the fundamentals of those stocks. Profit taking is expected in the market. Aside from that as well, there has been some yield pressure too that also influenced the sell-offs in the market in the last couple of weeks because the yields were going up. Expectation of interest rates hike, and then the large size of the federal government in terms of the bonds and also the treasury bill. So informed that judgment in the fixed income market as well. And then that's going into the second half of the year. So we started it July as well with another round of sell-offs in the equities market. So it shows that investors are taking their profits as we speak. And a couple of things that are actually responsible for that was, one, the Dangote refinery private placements. People were selling their holdings in the markets to go and get the private placement. So that really caused a significant drawdown in the prices of those equities, or those stocks, all right, and even the fixed income as well. So they also sold off in that environment. Also, the other one is the T+1 transition that we recently did, all right. So it was not favorable to fund managers, domestic and foreign, because they had to pre-fund their trade before now. And looking at that, if you have to buy a particular stock, we have to pre-fund, and the cost of fund is on them. So if the trade doesn't match that day and they have pre-funded that particular account, so that they will be losing interest rates, and they will also be losing any appreciation that should have come up on that. So that was also very significant. All right. And aside from that, there wasn't any significant thing that pushed it in terms of the fundamentals, aside from those major, those two that have been mentioned.
Oh, thank you very much. Okay, so we are in July already.
Yeah, sure.
H1 performance. Can you give us a market review, H1 performance per sector? How did they perform? Can you speak to it?
Okay.
Yeah.
Yes. In H1, the leader is actually the oil and gas, and also the industrial goods sector. All right. Yeah. Industrial goods sector closed around 98%. Wow. Almost the same thing with the oil and gas. Courtesy of the Dangote Cement, Wapco Cement, Boao Cement, and a couple of that as well. The cap of this were the Badger Paints as well. So they were the ones that moved that particular sector in the first half of the year. Very, very significant. The oil and gas also had Aradel and also Seplat. Yeah, in the oil and gas, aside from all other stocks within that particular basket. So they did all well. Aside from the insurance that had a negative year to date, the banking stocks was around 47% also in first half of the year. So it continues to tell us that there is a lot of prospects in the market, and all of those stocks are still doing very well. Expectation of their second half, first half of the result, H1 results, in terms of the second quarter rather, I will also push their prices to another levels that we are expecting, because using the year-on-year comparison and also making a forecast for the performance, all right, you know that they are going to be doing very well significantly, because most of the headwinds that they faced in 2024 and 2025, they have all gone through that, and they are all out of the storm now. So we'll begin to see a more realistic and more objective financial performance from all of this industry. So the first half had gone, and we are in the second half of the year, which we're expecting that they are going to be doing better than what they did in the first half as well, in terms of corporate performance.
Thank you. Okay, so we know that the oil prices have dipped for where it used to be.
Yes.
We know the Iran situation is the way it is currently. Do you say this has really driven most of this oil and gas stock to take a nosedive in their prices, or it's just the normal profit taking that we are seeing?
Okay, actually, the impacts of the went for the increase in the oil and gas actually was felt more by the upstream sector, those ones in the upstream, the likes of Aradel, Seplat, and though Hoando result is not how to have seen the impacts on that. However, when you look at the Aradel very well, you will see that what influenced their performance more, they had a very good performance, and what influenced it in the Q1 more was the ND Western acquisition that they did. So it was able to consolidate that, and their financial statement was very fantastic. The impact of the oil, the situation in the Middle East is going to also impact, is also going to be evident in their financial result, all right? But that dip that we're currently witnessing in the terms of oil price may not be too significant on their financial statement because of the acquisition and the expansions that they have done with their production. So why that is there, the dip in the price. However, one thing as well is this, that nobody envisaged this increase in the price before. And now that the price are retreating back to the what they began with. So all of them had it within their budgets then that this is what they're going to be. So their financial performance has already been laid out as regards what's going to be the base price and also the average price for the year. So any addition that they got from the oil windfalls is just supporting what their performance. So their performance is not completely reliant on that sharp increase and decrease in that price because it's still within the level and the budgets that they had at the beginning.
So you're attributing this to just profit taking?
Exactly, just profit taking.
Oh, fantastic. Okay, so what's your outlook? H2. H2, you seem very optimistic earlier on before we came on set. You seem very optimistic about H2. So what's your outlook for H2?
Okay, yeah, thank you very much. When you first of all, what determines the level of activities in the market is the macroeconomics fundamentals. All right, so let's take it one after the other. Let's take, for example, the inflation rate, all right, which is the main thing that drives the interest rates and also the exchange rate as well. So currently, Nigeria inflation rate is still at 15.9%, all right, and that increase, we had a 2 consecutive increase in the month of April and May, courtesy of the Middle East crisis that brought about the logistic cost on some of these things. So that was the reason. When you look at the food inflation is still very interesting, moderate. And now that we are going into the harvest season as well, you will see that the inflation rate will moderate. All right. The oil price is coming down now. I think the PMS is now 1,100 naira from 1,300 naira. So you can begin to put that back into the cost of commodities and see whether those things will be reducing inflation impacts. How is it going to look like in the second half of the year? In July 1 this year, the reduction in the tariff for staple foods, importation of staple foods, and also some other commodities as well is starting this July. All right. So once it starts, like some of the commodities were reduced from 40 to 30. The import duties on cars were reduced from 15 to 5% and the rest like that. So all of these things will support the moderation in the inflation rate. All right. Yes. And once that happens, then you begin to know that the operating cost of some of these organizations will go down. The logistic cost as well will go down because of the fuelings and the rest like that. Diesel price has come down by, I think, 300 naira and the rest. So all of this will support inflation, and going into the second half of the year, then you can begin to project that the interest rate going forward is going to remain moderate, all right, or even come down a little bit. So that will support the activities in the economy in the second half of the year, all right. Our exchange rate, in spite of what has happened, we have not seen that volatility, we have not seen that pressure in the exchange rate. The reason is because the reserve had maintained a very interesting level. In short, the CBN started with the fact that they need they are projected 51 billion US dollars reserves. All right. And we started with 46 billion. And currently at now, we have even surpassed the target of the CBN, and we are in the second half of the year. We're just starting the second half of the year. So that shows that the exchange rate had held firm in spite of the global volatility that has been experienced. So that is also supporting what the economy performance will be in the second half of the year. Now, when you also look at the aggressive activities of the federal government, they've been borrowing from World Bank, get loans from United Arab Emirates and the rest like that. So support infrastructural development and some other activities in the economy. All of these things would improve the activities in the economy. And by so doing, you will fall back on those things that you are seeing as we speak. So the second half of the year holds a whole lot for the Nigerian economy and even at the global space as well. Trump said he was forced to sign the memorandum of association. Understanding. All right, so apology. Yeah. So that alone, I've seen the oil price dip from over $100 per barrel to currently $71 per barrel. All right, in the last just 3 weeks. So if this continues, we'll go back to around $60, $62 per barrel, and that would improve the level of activities in the economy. So that's why we said the second half of the year holds a whole lot in the economy. In terms of agriculture, we are entering into the harvest season. All right, so we will begin to see more commodities in the system, in the economy as well, that will help the buying community, the consumer base as well, to buy more. And so when they buy more, those producing will produce more as well, and there will be more profits for those organizations too. All right, so that's why we said the second half of the year holds a whole lot in terms of the various activities. However, one thing we are still not certain about is the political direction, all right? Because the second half of the year holds the pre-election seasons, where campaigns will start in earnest, and a whole lot of activities, a whole lot of talks and the rest like that. So that is one of the concerns in the economy, all right? Pre-election years, over time, we've seen how it had gone, all right? We may have a repeat of what happened in 2023, 2019, and the rest like that. And we may have a new base as well. Why I'm saying a repeat or a new base is because the frontline candidates, all right, they are still the same thing that contested in 2020. They are still the same people coming back in 2020. So I just the scale at which they want to go about their manifestos and their campaign. Yeah. That's a cause for concern. So, however, overall economy, I think we are projecting to a more positive close for the year.
Okay, thank you very much. I want to take you to our non-familiar patch.
Okay.
You mentioned two things. First, the recent weather. It's been raining cats and dogs everywhere. The whole West African sub-region is really suffering a whole lot when it comes to this. Don't you think this might affect food inflation or the prices of food?
Yes, to some extent, because of the flood, it will wash away some of these crops and the rest like that. Okay. So it's going to affect. However, there should be some respite as well from those who have some of these reserves, all right, or silos or the rest like that, where they could keep some of those things. All right. And because we are not in the harvest season, there's still some opportunities for farmers to grow more as well. All right. And the impact is we really can't say for now how huge that would be, all right? By the time those who could do the assessment comes out, that's when we'll be able to know whether it is significant or not. But when you concentrate on the West African, what they produce compared to all other economies in the world, that like China and the rest like that, where they grow some of those foods too, are they also impacted by this kind of weather? If they are not impacted, like India produces a lot of rice. China also does that. And
they also have the monsoon season.
So if those ones are not really impacted, all right, those ones can augment what the local farmers will be able to produce, and then reduce that pressure. And I think that is one of the reasons why the federal government had that foresight in also reducing the imports as well, so that once you are able to bring more from outside because of what has affected you from the domestic, then you'll be able to even out that pressure from the prices.
Brilliant. But finally, before we go, I just want to ask, what's your prognosis for the financial markets? What do you think? Just want to pick your brain. Where should investors be looking to throw in their money second half of the year?
All right. So the banking sector still remains relatively very liquid. All right, and very promising as well. All right. So
you say to also go to the banking sector.
That's the most liquid, and in terms of look at what supports them, the interest rates have remained the way it is from the beginning till very very moment. Yeah. The yield had increased a little further. All right, currently. So that alone is going to impact their financial statements positively. The exchange rate had remained firm as it is, so there is no volatility on the FX that will create a pressure on them. So it's fine for the banking sectors. For the oil and gas, so the Dangote refinery coming into to listing in the IPOs in September. All right, that will also draw some attention to the oil and gas, because the valuation will now be used as a litmus test across the other ones. All right, for the fast moving consumer goods as well, because this is their season too. All right, they get more raw materials for their their production. And now that even the federal government is talking about increasing the minimum wage, all right, that means that they are going to also be increasing the disposable income, which means that investors or buyers have more money to buy more.
True.
All right. So the fast moving consumer goods, they're also doing very well. They are also a prospect. All right. Now, one thing this sell-off in the equities market had done, all right, is to make some certain corrections in the prices. Some of them that have been trading at 100% year to date, 70% year to date. So it gives everybody an opportunity to now buy low again, knowing fully well that their 52 weeks high is ahead, so they can buy low now. So this is an opportunity for new entrants who believed that the market still has a whole lot of prospects. And I keep saying that if the fundamentals of those stocks are still very strong, the sentiments, the weak sentiments you are seeing is just one of those things that always happen in the market. So it's seasonal. All right. So once the market picks up again, you begin to rise with the market. So it's a whole lot of positive. So for the market, the economy is doing well. The global end is also doing well, and also the various other things supporting the market as well.
Oh, thank you very much. It's always a pleasure.
Thank you.
Every time we have this chit chat. Once again, thank you very much, everyone, for joining us. Again, you've heard it here first. We are telling you, look, put your money in the equities market, put your money in investment. Let your money breed more money for you. Let your money do the work. Do not do the work. So come again, I remain your host, Dr. Akinleola, signing out for Broad Street Update. Thank you.
Thank you.